Why empower? Why should they come to you?
You want to do the best by your client, then the broker platform is the place to be. But you got to have that character, right? You got to have integrity. You got to be a team player. You got to be collaborative. For us, that's huge.
Why are you talking about interest rates and why aren't you just out there working? Why aren't you just out there being a resource to people? You can't get to generational wealth if you don't get out of poverty.
On average, consumer will save $9,800. $9,800 on their mortgage by working with the broker versus a retailer. I think part of it is you don't know what you don't know.
Yeah, so what's going on? Talk to us a little bit about what's going on in the loan business right now.
Loan business,
Residential loans.
loan business, actually, there's a lot going on. The big talk right now is interest rates, right? There's the big talk of the Fed. Well, that's why, because that's what moves the needle with the consumer. Yeah, right. It's a good point. As much as we don't like to talk about rates, because it's at the end of the day, it's not just about the rate, right? It's about, hey, it's really about affordability and the payment, all right? So, what it really comes down to it. But the reality is that's really what drives people, right? The news, right? And what's going on with the interest rate. So we all know that the Fed last week they dropped the overnight Fed rate by 0.25%. But what a lot of people don't realize though is that residential mortgage rates are not pushed by that Fed rate. And so, yeah, but unfortunately, all this talk on the news and social media, and unfortunately, even people in our own business, and they don't even get it. And so they're pushing out all this bad information. So the good thing about that is that it does open up the conversation, right? Yeah. What a lot of people don't know is that when the Fed dropped the rate by a quarter last week, lenders, mortgages already started baking that in, right? For the last couple of ways, maybe a month, right? That's exactly what happened last year, right? When the Fed dropped the rate. And so ultimately, yeah, it's great for the economy. I think we're going in the right direction in terms of interest rates, right? So hopefully if everything gets better in Q1, Q2 of next year, then we'll see some more rate reductions, right? But it ultimately comes out about affordability. That's the main thing. And so yes, interest rates have a direct effect on payments. Right now, this week, we're seeing rates are in the low sixes, right? Which is actually good. I mean, the lowest have been in about 3 years. We're pushing rates 7, high in mid 7, pushing 8, so not so long ago. So it's making a big impact on payments, right? And so some people that were on the fence, they started, come off and started kind of poke around, say, hey, what's going on? Where do I sit now? So that's the good part, right? But really, truly, the conversation continues to be affordability, and then also these homes are also the price of homes are starting to level off, right? Every day I was waiting for the prices to come down. Well, I don't think the prices are coming down. However, there's a correction happening. There's a deceleration of values, right? Where a lot of these the sellers are starting to become more realistic, come to realize that, they're sitting way too long on the market. So we have to bring down the cost of home. I had this conversation with my dad. Actually, they're listening to the home right now. They're having a conversation about dropping the price, right? Because I said, Dad, I mean, how long do you want to list or you want to sell, right? I think it's tough for sellers, right? Because there's a certain expectation of what they think that the market should give them, but the reality is the market gives what the buyer wants at the end of the day, right?
So you hit it right on the head. You said just a couple of things, and actually I'm glad I talked to you because I'm big on, man, why are you talking about interest rates all the time? It bothers me because it's a psyche thing. It's like, why are you talking about interest rates and why aren't you just out there working? Why aren't you just out there being a resource to people? But you actually, you hit it on the head. You're a good reminder to me that it starts a conversation out there. It gets people moving. You're right from the extent of people are pushing the wrong message because it's not really tied to what the federal funds rate, prime rate. It's different. The people that are pushing that is like rates. So it bothers me. But you mentioning like, hey, well, it starts a conversation. So I get it and I respect that. Yeah. That's important. But you also hit it right on the head. Affordability.
Yeah, it's number one right now, and it's been like that for the last couple of years. When my clients are, we get them pre-approved for a home, let's just say for $400,000, $500,000. What they're getting for that is way different than what their cousins or coworkers were getting 3, 4, 5 years ago, right? So that's what they're looking at. So I'm paying X amount for this amount of house, and that's where the disparity. That's when they start thinking twice. And I'm hearing it from a lot of realtors. Buyers are picky right now. Right? Well, yeah, because it's tougher for them to swallow. It's tougher for people to swallow that they're paying more payment for this home because everybody bases their budget off of monthly payments.
Yeah.
So
Yeah, it's wild, and so affordability, and it's wild because every market is different. Up here, I was talking to some people. They're like, "Oh yeah, we're an Escort 350." And I'm like, "What? A house? 350?" So where are house prices here along the Central Valley?
they're the average price point in the central about 450 to 500. Okay, that's now you run the gamut here between maybe as low as maybe 200 for just a beater, right? And that's well into the millions, right?
Okay.
Actually, I have a client today that reached out to me from Gilroy, Bay Area, 382 square foot home.
A mill.
Well, it's a fixer. The one for 400,000. It's not bad, right? But after he's looking to buy it, and he got to rehab it and fix it. It should be about 700,000. But 380 square feet. My garage is bigger than that. You know what I mean? 2,500 square foot lot, right? So it's into when you contrast and compare, right? Markets, and that's kind of what they're dealing with over there, right? That's why still I think the Central Valley remains to be very affordable. You get a lot of bang for the buck, and that's what we're seeing. A lot of people coming from the Bay Area, Southern California. They still see as Central Valley, Fresno, Bakersfield, Modesto as a place where they want to park their money.
Yeah.
Right.
No, I agree.
And people relocating too for just have a to have a better quality of life in terms of the money that they earn, so that they can stretch that dollar out more, right? Yeah. Especially now with a lot of remote work jobs now, so it makes it easier for folks to do that.
Yeah. Tell the people, tell our community, tell your community where they can find you. Tell them about your social media, and how they can contact you, find you, not only just in general, but from a loan standpoint. One of the top lending companies along the Central Valley. But tell them where they can find you and how to contact you.
Yeah, absolutely. So Eric Becerra, Empower Home Loans. They call me the Lone Wolf. I own the Lone Wolf. All my handles are at the Lone Wolf. So on Instagram, Facebook, Twitter, TikTok, you find me at the Lone Wolf. 559-348-3003. EricBecerra.com.
Born and raised?
Born and raised. Actually, I was born in Torrance. I don't know if I tell you that. No, down in SoCal. Raised in Salinas.
Middle Mary Hospital?
Carson Hospital.
Okay.
Yeah. Raised in Salinas, and we've been out here in the Fresno Valley for about since 2005.
And your mom and dad are first generation?
First generation Mexicanos from Jalisco. Yeah, immigrated over to the States, trying to find a better way. Dad ended up in San Pedro doing construction for a couple years, and then they in the 70s heard about the boom in San Jose. So I spent 10 years of my life early on in San Jose, and he was in construction and as a cement mason, and then couldn't afford a home. Working for the union for 10 years there. In 1988, decided to buy a house in Salinas for $95,000.
Wow.
Needed my aunt to co-sign in order to qualify for $95,000. So even at that time, there was already a disparity with the income versus the price of homes, right? And the jobs. And so bought their home there for some 1988. Also a beater, of course. He's a construction. So it's okay, mate. I'll fix it up myself.
Yeah.
And it's interesting because they were able to they really leveraged the appreciation in the home, the value of the home. 3 years later, my mom was always been the one that's not settling for less. My dad's like, no, estamos bien. Let's not mess with it. We're good. We're comfortable. Luckily, they have a good balance, right? So 3 years later, they pulled some equity out of that home to buy the second home for $160,000. Wow. Which is where I pretty much lived while I was going to high school at the time. My dad got his own business, became a licensed contractor on his own, did fairly well. In 2000, they bought their first brand new home, new construction, for $300,000. Right? They said, okay, this is it. It's going to be. So fast forward now, my dad is 72, is retired. Three homes are now paid off free and clear. Now they're looking to relocate down to San Diego. And so they wouldn't be able to do that now if it wasn't for them, best in the real estate. So all to say, man, we always believe that real estate is one of the best tools to create generational wealth.
Yep.
It's one of the reasons also why I'm in this business, and I continue to really advocate for my clients. I see what my parents went through, right? Gathering the last nickel and dime and to make the down payment and make the monthly payment, right? And so really advocated for home ownership. That's where it's at.
Yeah, that's where it's at. And I had a great conversation today with, don't know if you know him, his name was Oliver Baines, former city councilman here in Fresno, came actually to the house. I've been talking to him for a couple of weeks, and he's in a very unique niche industry. He actually made an important comment because we started talking about generational wealth. And he made an important comment. He said, you can't get to generational wealth if you don't get out of poverty. And it's very true. Yeah. And you saying taking every penny and every dollar to get to the next step is important.
Yeah. What are things that when I look back and think about growing up in the household was, my dad was very always conservative. It's all about budgeting, making sure that we're not wasting, you know. And now it's like try to sell that with my kids, and it's tougher than what it was here, right? Because we, I think we're a generation of consumers, all right, and that's important, right? So whether it's a home or whatever it is that you're looking to buy, is not, being considerate of, sometimes we might have to give up those trips to Starbucks and Dutch Bros, before
It's talking about that.
right, for the bigger dream, right? And it's a sacrifice, delayed gratification.
Yeah,
That's the thing. That's what's hard to grasp now.
it is. How big is your team?
We have about 25 loan officers with Empower Home Loans. But we're helping also loan officers or our branch managers or owners of mortgage companies that want to really have a spin-off and create their own DBA. Plug into the platform that really enables them to just operate and originate at a really high level. And so whether it's for loan officers and for those that will have that entrepreneurial spirit, I mean, it's exciting.
Yeah,
What's
okay.
happening.
Yeah, and it's funny. So I talked to you guys quite a bit, and so what are you looking? So you obviously are looking to add more. You guys have an unbelievable company. I think very highly of you guys. I respect you beyond anyone out there in the industry, and I always point back to the people. Your people are unbelievable, and so what are you looking? Because you bringing people into the industry that are already in the industry. What kind of people are you looking to bring into your industry? Because it's very important. You're looking to grow your industry. You're looking to grow your business.
Yeah.
So tell the community, talk to them. What kind of loan officers need to reach out to you? Why Empower? Why should they come to you?
Well, one of our three pillars is the character of our tribe means everything. And for us, it's really about that. So even if, you don't have to be the highest producing loan officer, right? But you got to have that character, right? You got to have integrity. You got to be a team player. You got to be collaborative. For us, that's huge. There's a lot of synergy in our companies.
True, actually.
There's a lot of support. We're an open book.
Yeah.
For those that wanna have that entrepreneurial spirit, that want to grow their business, they want to take it to the next level. They want to leverage tools, automation, the cutting edge technology, and also have the mentorship and be part of a group of folks that have been doing this for a while, but I feel like we report into our people sometimes to a fault. So much that it's a truth. Then that's who Empower is. That's what we're looking for those folks that want to really grow that and be part of something special. And it's really about really advocating and educating the consumer so that we're not just transacting, man. These are relationships that we're building, right? And so I want to be able to walk into the grocery store, and when I run into my clients, I know that I did the best for them. I was able to get them structure the best deal, give them the best rate, and the lowest fees. And I believe that the broker platform is the place to do that. I think there's, both retail, banking, and broker, there's a place for everybody and for everyone. But, I think that when you're in a position where you are self-sufficient, that you're entrepreneurial, and you don't need hand-holding, and you don't need somebody that's hovering over you, and you don't need to pour into an organization where the margins are really thick and there's a lot of overhead. And then, you want to do the best by your client, then the broker platform is the place to be. And that's why we chose 3.5 years ago to come to the broker platform after being in retail for 14 years. Prior to that, we were on the broker world for another 10 or 15 years, which was kind of the Wild Wild West before the meltdown of 2008, before Dodd-Frank came into play, before NMLS came into play. So we've been able to, really have a really good solid taste of both platforms, right? So much progress, so much growth in the broker world. That's really, it's taking off.
Yeah.
And another thing, you want to be positioned well for when that refi boom comes. Yeah. For loan officers. And so be positioned and have the platform to be able to give your clients the best deal possible.
Yeah, I think that's important because I've been able to experience your platform just through third hand, right? Seeing your team, and it's an unbelievable platform. And I witness it all the time. And not only that, I talk to so many different loan officers and I see their stuff and I'm like, OMG, you guys are dinosaurs still.
Yeah, it's interesting. Even this day, right? It's 2025 and it's still so archaic. The software they're using, I mean, people create it blows my mind that not only the mortgage companies are still not using web-based technology, right? And it's so lethargic, it's slow, it's inefficient, it's costing them money, it's costing, it's costing people more time and energy, and they're just not able to get back to the clients efficiently enough. It's huge. If you're not leveraging the technology, then you're fine.
You have to. And I think most important, talk, because I mean, in the end, it's about the loan officer wants to make more money. If we could talk about platforms, you could talk about all that. You could talk about giving to the consumer. We could talk about giving the best pricing. Loan officers want to make more money. And it behooves me to know that a loan officer closes a deal, but a loan officer, if they do a loan over here, they're making $3,000 less and than doing it over here. So talk to us on what the difference is. Tell them, because I want to know.
Yeah.
I want to know why someone wants to make less money.
Yeah. You know what's funny? So, you know, where do you get your gas? Those?
Well, I drive electric,
Okay.
but I have 2 cars. And when I drive my big car, I buy Chevron because I want the best.
Okay.
I pay the most.
Okay. But and you pay a premium because of, you know, maybe whatever additives and preservatives they added to it.
Yep.
But in reality, when it comes down to it, if you get your gas at Chevron, at Shell, or at Costco, it's really the same fuel. They're all coming from the same pipe.
I know that. Huh?
It's at the end of the day. And so most people would choose to go to Costco because it's at a discounted rate. It's a wholesale channel, right? And so now some people may want their gas pumped, or they want to walk into the convenience store and they're going to pay a little bit of a premium for that, Chevron, right? Or you don't have to wait in line for so long, right?
Oh, I see.
You know what I'm saying? That's I like to compare, you know, the mortgage business kind of like the fuel business, right? And so we're kind of like the Costco of mortgages, right? Because ultimately we all get our money from the same pipeline, right? In other words, the cost of money is the same whether you're at a bank or at a broker or at a retail lender. However, the difference is the margin that's added on top of that by that institution. As an independent mortgage broker, we're going to give you the raw pricing because we have the lowest overhead, right? So we pass on the savings to the client.
Yeah.
That's the difference. So we don't have to pay for these big leases, this system and underwriters and employees and compliance and all that. That's all covered by the wholesale partners that we were.
Okay.
Right. So what happens is actually there's a stat that just came out. This is a stat that's backed up by, I want to say, I don't want to misquote it, but on average, consumer will save $9,800 on their mortgage by working with the broker versus a retailer.
Oh, sure.
Now, whether that's translated in an interest rate or in cost to get that rate, like literally, I've sat down with buyers and with other loan officers. We do side by side, apples to apples, right? You know, for that same interest rate, you know, it may cost me $0 to get that rate. It's going to cost them $8,000 to go down the street with this retail loan officer. It's always the same thing when I talk to a retailer. Well, I don't sell rates. I go, neither do I. I sell service, right? But if I can provide somebody the same service, it's not better, you know, you have the best experience possible and still give them a better price, but why wouldn't I do that? Why? All right. So I think part of it is you don't know what you don't know, right?
That's what it is. That's what it is.
It really is. And so, I mean, I was in retail for 14 years. And it used to be, we used to pour the same cooler here, right? And so I always say my opinion changes until the facts change, right? And so when things started changing in the overall with technology and more accessibility, then that's really what pricked my ears. I said, well, we need to look at this a little bit closer. 2022, in third quarter 2022, rates peaked.
Yep.
And what happens is, in the retail, we don't have control. Even if you're a branch manager, even if you have a P&L, our branch managers in retail know what that means. If you run your own P&L branch, right? You feel you have your own control, but at the end of the day, you don't, because there's a margin that's stacked on top of that is not transparent, that the lender has to provide, because they got to pay the bills and they got to make a profit. And they got to answer to their shareholders, right? So when things get tough, they got to cover that no matter what. And guess what? Shit rolls downhill. That's right. Right? So guess what? Who ends up? Either the branch or the loan officer will cut the commission, or the consumer has to pay at higher rate or higher costs, right? Somebody. And that's the basics of it. That's the basics on it. And so we're on a mission right now to start evangelize you, really, to share the gospel, you know, about that there's a better way.
Yeah, and I think that's what's important. We truly believe in education, and our biggest thing is, how do we get the message out there to the masses in what those strengths are and what the threats are, and how we turn those threats into opportunities. And so going into fourth quarter, going into next year, what is Empower's, what are they planning on doing from a market share perspective and moving forward?
We're doubling down on relationships. Love it. Relationship. That's number one. Hey, lots it is. You know, relationships with our referral partners, our realtor partners. We've been forging relationships with the foster company really opening up to our loan officers also the access to the commercial land space, right? There's so much opportunity that we're seeing. We're seeing it right now in Central Valley with our loan officers and other loan officers that we have up and down California. We're enabling and we're providing these tools to our loan officers that they didn't realize that was available to them, right? And also our real estate partners, not being very narrow, or I should say not narrow-minded, but like maybe not realizing that I too can dip into the commercial space, right? It's full qual, right? With that, you can't, if you're a residential real estate agent, I shouldn't be touching it where it really is, real estate. And so I know there's some brokers have restrictions for that.
Yeah, no, it really is, because I sat with Friday night, I sat with a guy who used to be in title forever, and he's a realtor, and he has a lot of connections, and he says, we don't like, I do a little bit commercial, but man, the commercial guys hate realtors being into it. And I listened to him because I've heard this message time after time and again. And I listened to him and I said, well, why is that? He says, well, because they're lazy and they don't want to do the numbers. And I get it. They are lazy. And I said, let them finish. And I said, but what if I showed you another way and they don't have to do all that math and that cap rate that you're talking about, and they're just, I have them focus in the SBA, the owner-occ arena. And it took him about 10 minutes, but then it clicked for him. It clicked like that. And I said, all we're doing is connecting the same dots that you do for first-time home buyers, and we're doing it in this world. And when it clicked, and he says, I think I have a buyer. And I think I says, I think you said you used the word evangelize. That's all we're trying to do is evangelize to everybody and anybody we can. This world that you are in is a hidden gem.
Yeah, it really is. Yeah. No, there's tons of opportunity. And the thing is that also you have to be open to it. You got to have an open ear and also be able to recognize with that an opportunity is there. A lot of people will hear something, not realize that, or will just glaze over it. Like, it's not for me. That's it. It's not for me. No, because this is what I do and I don't want to go outside because it's uncomfortable. And, so what are we doing going into, next year, next quarter? And we said, I talked about doubling down on relations, but it's also doubling down on our activities, on the phone calls, that's important, and on the, and basically on education and advocating, right? Is having the conversations, picking up the phone, right? Picking up the phone and reminding people, hey, these opportunities are here for you. Picking up the phone with our realtor partners, our referral partners, reminding them this is available to them, with our clients, with the people with the business that we walk into, that we consume, right? Having the simple conversation, you got to visit my barber here locally, right? And I've had that conversation with them. We asked a simple question about, hey man, how long you been in the space in your business, and how long you been paying rent? And a lot of times people don't know, they realize that, and I got to really learn this, after meeting with you so many times, like, then you can buy this property with 0 to 15% down with the SBA. And most people don't know that. So I got excited when I first started hearing that. And after the conversations that I've had with so many business owners, dude, it's going to change the life.
It really is. It's going to change the life. And a couple things that I want to say is I'm very grateful as a company. I say this all the time. I live my life very emotional. I have a lot of young kids. I have 22 employees now that work for me, and a lot of them are under 35. And there's one thing that I do. I'm very thankful. I live my life in gratitude, and there's a couple of people that opened the door for me. I believe in hard work, and the door was going to open no matter what. Between Maria Sandoval and Eric Becerra, you guys were the ones that opened the doors for the Foster Company. You never hesitated one bit, dude, and I owe you beyond belief. You've never been afraid to send a phone number. You've never been like this. You've just been like this, open arms. There's no one like you. There's no one like Maria, dude. We thank you. We thank you for who you are. When you know you're with the right people, when you know you're with the right culture, and there's no one like you. There's no one like Jason. There's no one like your team. I'm telling you right now. So with all due with respect, my team, they talk about you all the time. I know we're in this for the long haul. I just continue to see it. And that's why I don't share my ideas just with anybody. I'm a student of John Chapelack. If you follow John Chapelack, I'm a student of John. And John changed my life in 2020 when I was going through some crazy stuff in my life. And he said, Chris, share it all. Just share it all and give everyone everything, because no one is going to do it like you do it no matter what.
Yeah.
And so I take that and I watch you. And if we could end it off with anything, what does the Central Valley, what do you have? What does Empower Loans have is going to give to the Central Valley? Talk to your people, man.
Yeah.
Tell Central Valley who you are one last time and what you're going to bring to them as we go.
Before I do that, I wanna
Go ahead.
piggyback on what you just said, and so I wanted to. I appreciate those words. It means a lot. I think that I believe that when one of the things I think we've actually gravitated towards each other because I think we really have a very similar ethic of grind, right? And one other thing, I saw you were willing to pour in as well, and we're an open book as well. And to what you were saying is, share. Like we have to have a mindset of abundance. We can't be holding stuff back because at the end of the day, anyways, look, you could sit here and provide the blueprint for people to do everything we're doing, right? Yeah. But what do they say? Everybody can watch Bruce Lee movies, but not everybody plays soldier, karate, or whatever.
Yeah.
But it's a spirit of giving, and there's enough for everybody, right? And that's unfortunately our business. There's a lot of haterade going on, right? And so, but no, man, we're different because I think we're open book. We want to share. We all want to grow. Rising tides lift all boats. I appreciate you as much as you poured into us, as well, you and your team. We appreciate you. I appreciate you from the bottom of my heart. You have come down. In fact, you're leading this movement out in the Central Valley. In fact, it's exciting because a lot of people don't realize what's happening right now is something special. You're from Southern California. You're from the heart of LA, and you're coming into the Central Valley. And so that's huge. That's special because, usually it's like, well, we're in LA and there's, Fresno, what's in Fresno? A bunch of cows and farmers, but there's a lot of wealth out here. There's a lot of people that actually hard workers, a lot of great business, a lot of good money. I'm glad you're out here and you're doing what you're doing. So
thank you.
I can't wait to see have a conversation from year from now. How many people you've been able to help? We've been able to help them, grow their business and create wealth for their family. So yeah, thank you. I appreciate that. Yeah. Other than that, really, at the end of the day, man, just as far as Empower Home Loans.
Yeah, talk to them.
Yeah.
These are your people. Central Valley is your blood, sweat, and tears.
No, just to say, man, we're here for the Valley and everybody around in California. And
you're right, everybody.
It's for everybody. That's all right. But obviously we're here. This is our backyard, and so we're gonna take care of our own.
That's right.
We're always gonna take care of our own. Really, we're always gonna want to partner with those that want to grind, but have the same work ethic, and they want to be part of something special. And so, we've been doing this for 28 years.
Oh.
And I believe we'll be doing this for another 20 at least. And yeah, man, it's a special. We want to grow together and just partner up with people that want to do the same thing. So if whoever's is game, then let's do it.
Yeah. So look, Eric Becerra from
Becerra, the Lone Wolf, Empower Home Loans,
and Chris Foster from the Foster Company, your #1 SBA resource, your #1 conduit to all the residential realtor community, to all the residential lender community. And as we always say, we're coming for you. Let's go.